Hello and welcome to Insurance Mantra, your weekly guide to the world of insurance only on ET Now. In today's Leadership Insight, we look at key changes in life insurance, the shift toward protection and non-par product, the impact of GST relief, and the challenge of low protection and retirement readiness in India. We'll also discuss how technology and AI are improving underwriting, claims, and customer experience, and how Insurance Act reform could shape the industry's future. To share his views, I'm joined by Tarun Chugh, MD and CEO of Bajaj Life Insurance. Thank you so much, Tarun sir, for joining our Insurance Mantra. Sir, let me begin with asking you the impact of GST rationalization on life insurance, especially on term insurance. Have you witnessed a pickup in term insurance? Because now term insurance is 18% cheaper.
Correct. So Anurag, yes, we are seeing a very good impact on term. I'd say that we all have been making efforts, but singularly this one move from the government has already had a significant impact. For us, almost 44% of our customers now have some kind of a extra term cover than what they used to have. The reason for term pickup is very clearly the 18% benefit that they're getting. And I think this is a shift that is there for the good. Term, in any case, if you realize, in India was the cheapest. If you look at comparable geographies, if you take a Singapore or a Dubai, where people also buy, Indians buy, NRIs at least buy term, it actually makes sense for most of them to buy it from India. So the benefit is huge. If I translate it for your viewers, the single impact of GST, a 35-year-old would usually take a 40-year plan. Now, 7 of his 40 years is free.
Okay.
So that is a huge impact.
7 of his 40 years is free. So, sir, this shift toward the protection and non-par, it's a structural shift or temporary phase?
See, protection, I would say, is a permanent fix, very clearly, because it's a very price-sensitive product. Non-par currently is looking good. I wouldn't really say that non-par is a structural shift. It is more a market phenomena. Last 3-4 months, with all that is happening around us in the globe, the stock markets have been a little choppy.
So the certainty...
Yes, certainty, people aren't really sure. So people tend to buy then guaranteed rates. They feel safer in these situations. Let's see how things go. And also, a determinant of that always is the interest rates. Because ultimately we buy government securities and hedge with that. So that we'll see. It's a quarter by quarter thing we see. So it is never a structural change, I would say. The investment products and savings products are more linked to market phenomena.
Okay. Sir, and sir, do you think that still awareness about term insurance is very low and we need to do a lot on this front?
A lot needs to be yet done. See, term is a very simple product to look at. Hence, customers have been focused on easily buying it. The process is a lot simpler. People have been trying to buy directly, but there's a lot more work to be done on the process still, simplifying products still. There is a lot more work to be done on segmenting the product. For example, I always say India is not one market, India has many markets. And if I divide this market into various parts, term in salaried class is a very easily sellable product. In the self-employed, which is the largest market, it is still in infancy, if you ask me. In gender, if I look at by gender, males seem to have a lot of the product, but women, as per the population, aren't really as popular in buying. This product doesn't seem to be so popular.
What would be the reason?
It's usually related to insurance, reinsurance guidelines, the paperwork involved, the human life value that reinsurers put to this, as also the fact that, whether that segment feels the need. If you're a housewife, you may not feel the need to buy a term cover. But if you've got a family you're supporting, you will.
Okay. Sir, we can see that India is aging faster and preparing financially, and budget is around the corner. So what's your view on the retirement product? Now time has come for a large section of society to think for the retirement products also, because there's a report that by 2030, more than 20 crore Indians will be above the age of 60 years. So retirement planning is also a major area where we need to focus on.
Absolutely, Anurag. In fact, I'm a big proponent and of the pension plan. Pensions are something that are required. India, with 160 crore people, you gave me a statistic of 60 years, but normally you should start planning earlier. A 50-year plus should start planning, because now people are sometimes finding that they don't have a job after 50.
Yeah.
Youngsters are replacing
retirement
them.
Also, concept of fire.
Absolutely. So all that is happening now. 1/4 of Indians today are above the age of 50. And like you also said, this is the fastest growing segment at 22% growth in terms of number of people joining. And it's a significant part of the market. I don't think we have sold much, or we as an entire market have talked much about the fear of living longer. Yeah. And with better medicine, there is a lot more longevity that is coming in. Again, by cities and villages, it varies. That data has been difficult to find. As a result, we all need to do a lot more in this. My request to the government would be that in the budget, if we can look at a situation where, there is more benefit available on the annuity plan. Yeah. Annuity plan is the only plan which covers you till you live, and it's a guaranteed rate, so it gives you certainty in life. But it is today taxed as income in your hand, while you've already invested some money. So at least till the point that your money is not paid back to you, just the returns maybe should be taxed. This is not a fair thing to, even tax the principal which you already taxed earlier. So I think that is one thing that needs to be changed. Also, like the NPS is in favor, we should.
So there is no parity.
There is no
parity. Life insurance product and NPS. So.
The choice of word is perfect.
Yes, sir,
there's no parity.
There should be parity.
Absolutely.
Yes, sir. So my final question before I start our rapid fire segment, a lot of talks going on the commission structure. There was a mention in financial stability report also of Reserve Bank of India. Mm-hmm. DFS is also not happy with the commission structure. So what's your view, and what you would suggest regulator that, okay, this kind of commission structure is win-win for both industry and policyholder?
So I think first is a little bit about commission I'd like to speak. Our commission is normally front-ended because it takes so much more effort to get a customer. If you look at commission over a period of 3 to 5 years for premiums that have been paid, and more so over 10 years, you find that commission is actually not very high over a period of 5-10 years. So maybe the changes that should come should be in keeping with the fact that as persistency is better and better, for such situations, commission should be paid maybe more level commissions than front-ended. But there will have to be a front-ended commission as well, which is still higher than what you see in other financial products, because the ratio of customers approached to the ratio of customers who actually buy, that the costing, the dynamics for an advisor doesn't really work out. So it is a moot point. I would hope that the sector is spoken to, and we are kept in
there should
discussion.
Be consultation, proper
Absolutely.
Consultation. So obviously the draft paper will come, and then you can give your suggestions.
It's just that, the sector has seen so many jolts last 3 years.
Yes, sir.
We can do with less.
Surrender value, then on the tax front, that 5 lakh rupees
And the
cap.
GST.
And then GST. GST is a positive thing for
As
sector,
well, yes,
but yeah,
yes.
ITC impact is there, sir. So now I'll move to rapid fire.
Okay.
So you have to answer spontaneously. So my first question is one word to describe India's life insurance market today.
Resilient.
Is life insurance in India still sold more than it's bought?
It is sold more.
Biggest challenge for life insurers right now, trust, affordability or awareness?
I would say trust still.
Is digital distribution a real cost saver or just convenience layer?
At this juncture, convenience, but at scale, it would be a cost saver.
One IIT reform that has genuinely improved the customer experience.
I think the Customer Protection Act.
If IIT gave you one instant regulatory wish, what would you fix first?
Nothing really. I think don't give us too many jolts.
Okay. Are commissions totally fully aligned with long-term customers' interest?
Not entirely. Work needs to be done.
Should IIT take a tougher stance on persistency-linked commission?
I think we should link commissions to persistency, yes.
One myth about life insurance customer that insurers often get wrong.
They always believe that nothing's going to happen to them.
Is term insurance still the most underbought yet most essential life insurance product in India?
Perfect.
One mistake do customers most often make while choosing a term insurance plan?
They don't buy enough.
As a CEO, what is the one metric you personally track most closely?
Customer experience.
One piece of advice you would give your 25-year-old self today?
Listen and reflect.
Is the Life Insurance Council doing enough to improve industry-wide trust?
Not too much, needs to get its act together.
One leadership lesson that Mumbai taught you and one that Pune reinforced.
Speed is what Bombay teaches you, and Pune teaches you more process.
Okay, sir. Thank you so much for joining our Insurance Mantra show and sharing your thoughts, sir. Pleasure talking to you.
Thank you so much.
So, time for a short break now. After the break, in our Expert Speak segment, I'll be joined by Anup Seth, Director and Chief Distribution Officer, Edelweiss Life Insurance. Stay tuned. Welcome back after the break in our Expert Speak segment. I am joined by Anup Seth, Director and Chief Distribution Officer, Edelweiss Life Insurance. Anup sir, welcome to Insurance Mantra. It's a pleasure to have you with us today, sir. Thank you for your time.
Thank you for having me over, Anurag.
Okay.
My pleasure.
Sir, just want to ask you, according to you, because today we are talking about life insurance, investment products and life insurance, what kind of mistakes still policy holders are committing again and again without realizing that the consequences or the impact it will have on their investment products?
I think one of the biggest thing, Anurag, is अगर कोई आदमी को पता है कि मैंने क्यों ये प्रोडक्ट लिया है, what purpose is solving, तो शायद commitment to remain in the product will be far higher. ऐसा क्या होता है ना, जब तक मुझे पता ना हो कि मेरी this product is bought for my retirement or my child education, somewhere policy duration में you become dissonance.
Okay.
कोई और attractive investment दिखता है,
okay.
कोई और immediate need में आपको withdraw करना पड़ता है.
That in the life insurance products also there should be a proper goal, because I conduct a mutual fund show also. So in that mutual fund show, all the experts, whatever SIP you are starting, you should have a defined goal. Okay, yes. This SIP is for my son's wedding. This SIP is for the education. This SIP is for my retirement. So you mean to say that in life insurance product also there should be a goal-based investing, or whatever product you are buying, it should have a proper goal.
100%. Otherwise क्या है ना, in absence of this, you will never know कि ये मेरी क्या need पूरी कर रही है. Which part of my need have I over-index? Which part of my need have I under-index? और मुझे ये कब ये requirement होगी, उसका क्या cash flow रहेगा, क्या liquidity चाहिए, मुझे कब चाहिए. और lot of time people make this mistake of saying, all my investment should remain liquid. अगर आपकी सारी investment liquid रहेगी, तो liquidity comes at a cost.
Okay.
Any liquidity will come at a cost, because अगर आप सारी investment liquid रहेंगे तो आपको ये realize करना है कि वो जो return दे पाएगी उससे -1-2% मिलेगा. Because if I try and keep everything liquid, but if you try and link things for long term and say I will not touch this investment 20 years because 20 साल के बाद मेरी retirement आने वाली है. अगर मैं इसको आज touch करूंगा तो मेरी retirement में शायद मैं कम पहुंच पाऊंगा. The idea is to commit for a goal, remain invested और invest करके उसे भूल जाना चाहिए. A lot of times people make this mistake of digging into the investment और short term needs जब आती है तो अपने लॉन्ग टर्म इन्वेस्टमेंट में डिगिंग करते हैं, फिर रियलाइज करते हैं अरे मैं 55 का हो गया हूँ, माय रिटायरमेंट इज स्टिल नॉट फुलफिल्ड बिकॉज आई डिग्ड इट डूड. मैंने 2 बार इसमें 50 लाख 1 करोड़ निकाल लिए है, तो अब उतना पैसा कंपाउंड रहा नहीं.
Our Southern India viewers, sir, I want to ask you in English only. Even people do commit for the long term, but they don't stay for the long term, and they end up breaking their policy, or they end up surrendering their policy, saying that okay, it's not giving much of a return.
तो वो एक concept है, you're feeding into your short term needs for your long term wants. आपकी जो long term का future है, आप उसको you're compromising that for your short term impulsive behavior. और ये हर एक कैटेगरी में दिखा गया. तो my biggest advice to people is be clear, why are you buying a product, what need is fulfilling, and what discipline will it require for you to fulfill that goal, and then stick with that almost to the extent, I would say, I'm going to quote Mr. Kedia, capital market, he's saying what money you put in the capital markets or any market or investment, you should forget it, that's not in your pocket. You should run your life from what is in your pocket and not what you have invested, because what you have invested is for your goals and your dreams and aspirations.
Do you also think that, sir, we don't manifest or think for the longer horizon, and we think for a shorter period only? Okay, I will start this journey after 2 years because it's not required now.
Yeah.
So that is also a reason where people miss out.
Actually, multiple things are happening, Anurag. This whole world has become about instant gratification. This whole world has become about now and then. This whole world has become about consumption. And GDP is a very different order. But आज India youth and India middle 30, 40 are also thinking about consumerism. Consumerism is not for India. India needs to be more hardworking, more focused on productivity, efficiency, more focusing on savings. The irony of this point is India's savings rate from 2017 to now has dropped from 37% to 30%, which means even if the GDP has grown, our consumption habits are allowing us to consume and consume and consume, whether we require or not. What was a luxury has now become baseline. And in doing that, what is happening is people are not realizing that our economy is going to be built on savings and deploying the money in assets which can compound and solve your long-term events in life. Visa people have gone into things. I read one Apple Watch, the iPhone 17. People are buying it on credit. I'm wondering, why is it required? What we require is people investing the money in making sure that
buy term insurance
or invest into capital markets and various products of life insurance, retirement, pension. ये करिए, because those are assets which will income accruing रहेंगे. And one of the biggest thing I've learned, India has learned how to make money. But India has not learned how to make their money to make money.
Okay, investing.
Investing costs, unfortunately, this is not taught in
schools. What would be your suggestion, somebody who's watching your show right now, what would be your suggestion to them, to millennials, to Gen Zs, that they should avoid doing the mistakes and they should do it differently?
One of the biggest principles I can tell you, I've got 2 teenage daughters, 21 and 15. I keep on telling them is first save and then consume. You have to have an orientation that you are saving 30 to 50% of what you're earning. And that 30, 40, 50% has to be invested into different asset classes based on your goals. You have to be clear, what are you consuming for? Solution kya hai? You can't be buying things for the heck of it. You have to buy things, financial products, whether it's SIPs, whether it's life insurance, whether it's pension plans, you're buying it for a need. Be clear of purpose, stay invested, don't eat into your long-term goals for short-term needs. Almost invest and forget. That's when you will take the power of compounding.
Invest and forget.
Forget. You can't be in this whole thing of I'm every day checking my NAVs and every day checking my return on investment. That is not the way things are built. You have to get your money seeding for the long term, have discipline. Only then will you have mental peace. Otherwise, you'll get in this time horizon gap concept that while you think I will need this money in 20 years, it shouldn't happen that you start investing not today, but in 10 years, because then you'll have only 10 more years to compound it. But if you invest today, you start small, you start building as you keep on increasing your income, you start saving that 60% and you start investing, upping your investment. And the last thing, which is more important, not a single product in the capital markets or in the debt market is good. Have a portfolio balancing. They say as you go older, move more towards your fixed income debt side. As you become younger, take higher risk, but invest for long term. Let the compounding play in and diversify karo is my advice.
So thank you so much, sir, for joining our Insurance Mantra and sharing your thoughts. A pleasure talking to you.
Thank you for having me.
So that's a wrap on this edition of Insurance Mantra, but we'll leave you with our insurance basic. Did you know? Life insurance is not only for protection, it can also help in retirement planning. Some life insurance policies build a cash value over time, which can be used to support income needs after retirement. Plans like whole life, universal life, endowment plan and pension-oriented insurance plan can provide money either as a lump sum or a regular income in later years. In this policy, part of your premium gives the insurance cover and part helps create a long-term saving during retirement. This accumulated value can be accessed through withdrawals, loans or maturity benefit. At the same time, the policy continues to offer a death benefit, ensuring financial security for a family. That's why life insurance, when planned well, can play a dual role, protect plus retirement support. So stay informed, stay protected. That's our insurance mantra.